So here's the deal. Gratomic announces the closing of a $2 million non-brokered private placement, which kind of sucks, kind of makes sense, but is also kind of awesome. More on this later, but I first want you to completely understand the private placement. The company sold 5.6 million working capital units for a price of 36 cents to a couple of investors for a total of $2 million. That $2 million figure is now Gratomic's, and the company can use these funds however they desire. But first, each working capital unit consists of 1 common share and 1 common share warrant. So the buyers of this private placement get 1 share for 36 cents per share and 1 warrant with a strike price of 54 cents until September 14, 2023, after which the warrants will have a strike price of $0.8 per share. By the way, warrants operate very similar to options. So if the word warrant scares you, just replace the word warrant with option and it should make sense. However, this construction of warrants having different strikes at different moments in time, that is new to me. I haven't seen this anywhere before. I am sure this is not completely out of the ordinary, but it is a special feature Gratomic has embedded in this deal, most likely to preserve shareholders' value as much as possible. After all, dilution always sucks. But it seems that the investors as well as Gratomic are both very confident in the share price of Gratomic rising rapidly soon, otherwise they wouldn't agree to this deal. Now, how much money will Gratomic get through this private placement? If we want to maximize the most dollar in the bank for the same amount of dilution, Gratomic would get $2 million today, plus an additional $4.5 million after September 14, 2023. Worst case, they get the $2 million today, plus an additional $3 million somewhere between now and September 14, 2023. Keep in mind people, the shares were sold at market conform prices, and even the warrants today are placed at a value higher than the current share price. So this is actually a pretty good deal for us current shareholders. It seems to me that the company raised the bare minimum required, just enough to continue operations. Just enough to finally push Alchem towards production. Because, you know, $2 million isn't actually a lot of money for companies. Gratomic could have gone ahead and raised $20 million at the bargain prices of today, but they didn't. And that, in my book, that is worth something. That something being not royally screwing over shareholders, which is something that cannot really be said for most small cap startups. The company 100% guaranteed needed the cash, since on the 30th of June the company was sitting on just $200,000, so dilution was almost a guarantee. Dilution was to be expected. Quick summary thus far. 1. The private placement sucks because dilution always sucks. 2. It was to be expected since the company does need cash to continue operations. 3. It is also pretty awesome since Gratomic has taken all the steps they could take to preserve shareholders' value. So that was the private placement really. But the private placement in combination with this recent interview from Armando Verhate really tells us that the timeframes we were waiting for can all be thrown right out of the window. Literally every single time frame I've discussed in my recent video is now put forward, at least slightly. I know, a startup needing slightly more cash and slightly more time, big shocker. Anyways, the missing of those timelines sucks. I think all Gratomic investors do want the company to execute as soon as possible. And I am 100% one of those excited investors. But the reality is, delays are to be expected. Constructing a world's first graphite processing facility. After all, Gratomic is using an entirely new process. Well, that is pretty freaking tough. And to be completely fair, the company could be handling their missed deadlines in a different and potentially better way. For example, the new timelines of these significant milestones are muddy at best. So I've sent an email to the company this morning asking for something to look forward to give you guys a clear and concise picture of where the company is now likely heading. And of course, if and when I get a reply, I will update you all. And really, that is all I can add to the discussion today. The private placement was needed since Gratomic was running really low on cash. I love how the company raised the bare minimum required and they got some really favorable terms for us current shareholders. And lastly, the new timelines are blurry, so I am awaiting a reply regarding the new updated timelines. Hopefully I can update you all soon. And with that said, thank you so much for watching. I love you all. Peace.